Hello, welcome to the January monthly market report. I am Jordan Dove with Dove and Associates at Nationwide Realty in beautiful Las Vegas, Nevada. And for the next 20 minutes or so, we're going to be talking about the most important things happening in real estate right now. So, as we start the new year, I'm going to sort of define reality as we kick things off here in just a minute, but I'm also going to give you a template for what to expect in the coming market. So today, I think the best advisors in today's market are creating certainty for their clients. And the only way to create certainty is if you know what's happening. So that is my goal here today. And what I'm going to do is go ahead and I'm going to share these slides with you because I know some of you have commented, hey, you're visual learners, so I'm going to do my very best here. And we're going to talk about what's happening right now in the real estate market. Let's start off with this quote from Bill McBride from Calculated Risk. It is possible that rising mortgage rates will slow the housing market, or the Fed might raise rates sooner than expected due to the recent pickup in inflation. But I believe one thing is certain: inventory will tell the tale. And that's probably the most true statement. There's so much speculation in the market right now. What's going to happen with mortgage rates? What's going to happen with the Fed? What's inflation doing? Let's add coronavirus to that and the Omicron stuff. So much out there, people speculating on it and its impact in the real estate business. But no doubt, we can guarantee inventory will be the market indicator this year. It's that way every year in real estate, but no doubt this year it certainly will be that. And as we define reality, here's the reality. The bad news is listings are at record lows. Over the last couple years, if one thing has been true, it's that low rates, people's definition of home, people's desire to own a home has depleted housing supply all across the country. There's a number of reasons for that. Number of reasons for the causes. Different reasons. And I've covered many of those extensively in past videos. But the bottom line is listings are at record lows. If we start to look at that, look at the graphic representation of this. This is a look at housing inventory year over year. So what Realtor.com does here is they look at where we were at in 2020 in December and where we are at in 2021 in December. So just a month ago, the most recent data, the national average, you see kind of in the middle of the bottom of this slide, almost 27% down year over year. And if you look across the country, Idaho kind of leading the way, so to speak, at 55% down there. But most of the country in the lighter brown color, somewhere between 15 and 30% down. But no doubt a significant lack of inventory across the country. Okay? So now the truth is, right now in real estate, we will not be able to reach our market potential because we cannot sell what we don't have. If we had plenty of inventory, you'd probably see more homes sold in this country than ever before by a ton. But we don't have the homes to sell. So if you're working with somebody or talking with somebody and just the frustration of where things are at, this is really the reality across the country. I'm not saying it's not impossible to buy a home or anything is impossible by that, but it defines reality. If we look at this overview going all the way back to 2019, this is a look at months of inventory in residential real estate, starting all the way back in January of 2019. So you think about January of 2019, we're here. 4 months on average, let's call it, in supply. Start to dip down in 2020 and spike back up during the lockdowns in April and May of 2020, and then sort of depleting since then. The record low of December and January last year of under 2 months supply, and we're right near that as well right now. So inventory sort of edged lower each year as we've gone through the last several years. That's the bottom line with inventory. We do not have what we need. We cannot sell what we don't have. We will not reach the market potential in real estate this year if we don't have the inventory. The question that we get certainly a lot of times, and I think that experts are getting, and what we're seeing is, will sort of this wave of coronavirus affect inventory? Will that affect the real estate business? It could affect people delaying putting their home on the market. I don't think that's a long-term effect by any stretch of the imagination, however. But I think over the next weeks, the month of January, it could affect people. I'm not saying it will, but I'm saying it could. Let's talk for a minute about buyer activity. So we talked about sellers, about listings, where we're at here, what's happening with buyers. Just like I talked about with, the effect of the pandemic potentially on sellers, one thing I can tell you definitively is it's not pushing buyers back. It's not slowing back buyer demand. It's not slowing down buyer demand. So the picture that I would paint is lack of inventories and buyers continuing to come into the market. So let's define that. Let's look at that for just a minute. Showings are still strong. Headline right here, greater than last November. This is from Showing Time. Ever since the pandemic, we've looked at showing time to measure activity. We know on the front end, it's a leading indicator of activity. If people aren't scheduling showings, then those ultimately don't turn into contracts and ultimately sold deals. But we look at this past November of 2021 and compare that to last November of 2020, we're ahead in showings. Stronger activity than last November. It's very interesting that we see that strong activity continue to happen from buyers across the country. So, I think this speaks really to maybe those that wonder, okay, where is the health of the real estate market? Is it slowing down? It is not slowing down. In December, it cooled slightly. January, in my market, has been absolutely nuts. And matter of fact, showings still continue to crush pre-pandemic numbers. This isn't looking at showings over the last 5 Novembers coming from Showing Time. So you see that 2017, 18, 19, I always call those the last 3 normal years, certainly maybe in the world, and if not, in real estate. 2020, we see the shoot up there in activity. We know very well what that was all about. And certainly 2021, we're seeing even more of that. So activity remaining strong coming into the holiday seasons that we just wrapped up. Michael Lane says it best this way. He's the president of Showing Time. Showings traditionally lag during holiday season, but the data we're seeing tells us that buyer demand remains strong. The fact that every region in the United States showed a year-over-year increase indicates that buyers are undeterred, and it speaks to their desire to keep searching for their next home. No doubt, buyers are out there in full force. Many of them motivated by a number of different things right now. It could be the impetus of rising rates and saying we want to do something before they rise. It could be a scenario where they're saying, hey, something's changed in life or in work, or, that's caused different needs. But no doubt the buyers are out there, and they're out there in force. And ultimately, we talked about a lot of things about this leading indicator of showings. Those are turning into deals, pending deals. Sales are higher than pre-pandemic numbers as well, off a little bit from 2020. But again, you go back to the normal years there in gray, we see pre-pandemic, the measure of that from NAR. Last year, 2 years ago, 2020, that reading 125.8, 2021, 122.4, just off where we were in 2021. So strong demand out there. That demand is turning into contracts. The market is moving there. We just need more listings. Now you know. So we're a few minutes into this monthly market report, and maybe you're thinking, I already knew that. I knew we didn't have inventory. I know I've got plenty of buyers. I know that are out there. So what is the opportunity? So many experts are talking about that right now. I think there are a number of opportunities, big opportunities right now. And if I'm leading a team or I'm coaching someone, which I do, that's wondering where's the biggest opportunity, it's right here. It's in home equity by far. Now, what I'm going to do for the next few minutes is I'm going to break down the current situation with home equity, kind of wrapping up this year. The latest numbers we have in the past year, and so I think this is the opportunity. It may be driving a lot of buyers saying, hey, we've got this equity. Do we harness that and move up? Maybe if we're retiring, move down and downsize and use that to sort of build a little bit of a nest egg with a number of different things that people are doing with home equity. But no doubt it is absolutely there. No doubt people are thinking and actively considering using that home equity to do something different with housing. So, biggest opportunity here from the realtor's confidence. The lack of insight around home equity presents an opportunity for real estate professionals who are always looking for touch points with past clients. So here in January, I'm talking with every client, every active client, everyone that I'm doing business with. And do you know how much your home is worth? We've talked about the pair here on the monthly market report. And do you know how much you owe on your home? Do you know how much your home is worth? That gives you equity. All right. What are the things you can do with the equity? Do you have different needs that you need to move up? Do you have different needs you need to downsize? CoreLogic's third quarter home equity report showed that the average homeowner with a mortgage gained in equity $57,000. I could end the equity piece on just that. $57,000 as of the third quarter. Latest numbers we have, the average growth in equity in a home. Now there's so many people that can listen from so many different parts of the country about this market report. So here on the West Coast or somewhere like that, it's probably a multiple of that number. But if you're in the middle of the country, maybe it is that. Maybe it's a little bit more depending on where you are. But $57,000 last year, that's a shocking number to so many people that we need to get out there with the folks that are thinking about doing something. Okay? 31.1%. That's the year-over-year percentage for increase in equity in the United States, homes with mortgages, $3.2 trillion. That's the rise in equity. And then they go on to say this summer, home prices growth reached its highest level in more than 45 years, which pushed equity gains to another record high. So equity, no doubt, the shining star of the pandemic. The story continues on. We talked about the pandemic in 2020, how equity has allowed people to do things that maybe they were in trouble, they didn't have during the housing crisis. And this continues, no doubt, today. I know people think that there's going to be this market tsunami crash. Guess what? We're not going to have the short sales and foreclosures that we had in 08, 09 because people have equity in their homes. They can just sell it and cash out and be fine. Okay? So, if we look across the country, this $56,700 in average gain, you see it depending on the state you're in. Maybe it's high in California, it's $119,000. Think about that. Somewhere in the middle of the country, $22,000 to $24,000 in gain in the price of a home. A good thing for homeowners. A report came out a couple of months ago saying in every major city, listen to this, every major city, it was cheaper to buy a home than to rent when you consider the equity growth right now. Every major city. And that's something we need to be talking about right now. Rents have been skyrocketing. Certainly, home equity is a benefit of owning a home that many people enjoy. Okay? Going into this, Frank Martell at CoreLogic said, not only have equity gains helped homeowners more seamlessly transition out of forbearance and avoid a distressed sale, but they have also enabled many to continue building wealth. That's what we were just talking about. The ability to build wealth through equity is one of the greatest benefits of home ownership. We know there's a ton of non-financial benefits to home ownership. We've talked about that in the past, but how home has grown in many people's hearts and minds as we've gone through the pandemic. But no doubt, the financial benefit of building wealth is a huge opportunity in home ownership. And she goes on to say U.S. households owned $36.8 trillion in owner-occupied real estate, $11.5 trillion in debt, and the remaining $25 trillion in equity. In inflated adjusted terms, homeowners had an average of $294,000 in equity in quarter 3 2021. It's a historic high. It's unreal. Okay, it's unreal. The story on equity right now across the country is real estate is unreal. According to Odeta Kushi here, the average homeowner is $294,000 in equity. Now, it's going to be different in different parts of the country. I am not debating that, but no doubt the biggest opportunity we have to connect homeowners with the equity they have, define that for them, and be there. And what we're doing there is to be with them to help them make wise decisions. And certainly many are wondering, okay, should we do something? I talked last month in the monthly market report, go back if you didn't get to see it, about the pent-up selling demand that we believe is out there based on tenure and what we've seen over the last 10 years. I do believe that's there. I do believe a lot of people are considering selling their home and want to do that safely. They want to do that in the right timing, and it's our job, my job, and to be an educator. Okay, I think the one thought that we started off here was the ability to create certainty. In doing that, we can help you homeowners create certainty about what's the next best step for them. Okay. First of all, what to expect on mortgage rate projections. You can see here from Fannie, Freddie, NAR, MBA, what they're saying about the 2022 market broken down by quarter. Quarter 1, 2, 3, 4, the average there. I'm not here to tell you this is where interest rates are going to be. I believe that's a fool's game. I'm going to always look at what the experts are saying, and I'm going to give you an expert opinion on this. What are they saying right now? Somewhere between 3.5% and 4% in the second half of the year. We're seeing volatility even this week, seeing rates jump up. I just saw the 30-year fixed 3.69 this morning, Friday, January 21st, and that's going to go up, and down, but I do believe we are in an upward trend. Okay, talked about this several weeks and several months ago. I think we're going to go back to where we were. The last 10 years, we've been between 3 and 5% in the average 30-year fixed. Still great financing historically. Great financing for a home, but that's what you can expect. That's how you can create certainty in the mind if you are looking to purchase. Okay, forbearances have finally fallen below 1 million. This going into this year, I believe, is going to be a non-issue, a non-message. A lot of people ask, are forbearances going to all hit the market? Are we going to have this wave of homes on the market? I don't think you're going to hear much about it, but I want to educate you on it, okay? Just under a million, about 890,000 mortgages are actively in forbearance. That represents about 1.6% of active mortgages. We've covered this extensively on what's happening to those that are coming out of forbearance. If you remember the circle graph that we've used in previous videos, I can tell you those numbers are still in those parameters. I don't have them today, but 4 out of 5 that are coming out of forbearance are coming out either having gone through a workout or paying off their back payments. There are people that still will need to do something. It's a very small fraction. Oh, and by the way, what we just talked about, their homes have appreciated on average $57,000 in the last year. So they have opportunities. I still think we need to talk about this. I think that, agents need to be available for folks that may need it. But going into 2022, the forbearance, I believe, will be a non-issue, and it's going to be something we continue to hear less and less about. Okay? Claire Bolton Smith from CoreLogic says that we may see a little bit of an uptick in the foreclosure rate in 2022. Just an uptick, though, from an extraordinary low level. We're not expected to see big increases. Listen to this. We expect delinquency rates overall on home mortgages to actually continue to remain quite low. What's going to happen with foreclosures this year? And according to CoreLogic, they said it's going to remain quite low. All right? That's what CoreLogic said. And I think, foreclosure is going to be a non-issue, and because there are options for homeowners. I don't see banks trying to posture, trying to foreclose on people. I think they're trying to work whatever out they can, and the numbers just aren't there like the last housing crisis. That's largely due to the hard work of all the agents who's been educating and been as a resource for the people that needed to have something. The other question is what's going to happen with prices. We've talked a lot about pricing over the past several months, and the fact that we've seen unbelievable pricing in this country, and the question sort of that pricing has peaked, we've put on the table. And I'm going to use this graphic here to show you FHA, CoreLogic, Case Shiller. This is a good look going back to January of 2021 all the way through October and November of last year of pricing. So let me break this down for you, because the title here is, has home price acceleration peaked? Question mark. The question right now. So start out in January. The funny thing about this graphic is we're starting out at 10%. We're starting out at historical high appreciation, and we're rising each month. So this is a measure of year over year. So what each one of these organizations does is in January of the past year, they look at January 2021 as compared to January 2020. What did prices grow by? And we know that in 2020, they grew by about 10%. And then each month it goes on. They record those for the other month. We said prices appear to look like they've peaked, and they do, but here's the question. Have they peaked or have they plateaued? Sort of want to put that question on the table. I believe we're going to have more of a normal-sized appreciation with the interest rates rising. I think it's going to stay at a steady, more normal rate of between 4 and 7% year over year. I know some people are predicting it's going to be really high. Some are even predicting negative. I don't think that's going to happen. Now, some markets might see negative appreciation, but I think all the major hot markets are going to see that 4 to 7 to 8% appreciation, okay? But no doubt appreciation is still very, very strong in the market, and we expect appreciation to continue in 2022. Okay, and if you're looking at those forecasting appreciation right now for 2022, the average 5.2%. I mentioned that in a previous video, and anywhere from 7.5 to 2.8. Here's one thing I see about forecasters right now, that they're already starting to up-level their forecast. I think this average here of 5.2 is low, so I'm going to revise my previous statements of 4 to 5% appreciation to 7 to 8% appreciation, but it's anyone's guess. These are just opinions, but I think we're going to see more than 5% appreciation in real estate and less than 10. But, we don't know. We don't know, okay? The market's still moving really fast. Rates are going up. I think first-time home buyers are going to be priced out of the market. And as we look at interest rates, we look at forbearances, we look at prices, we look at all the things happening, the bottom line again from CoreLogic. So I overall think that 2022 will be another strong year for housing, albeit with higher mortgage rates. And then we do think that home sales will continue to rise and actually reach a 16-year high in 2022. So no doubt across the country, we're seeing a lot of things happening in real estate. We do need more inventory. Buyers are in full force. But overall, it looks like a very, very good real estate market coming up this year. Again, I just want to wish everyone a happy new year. Hope everyone's doing well. I am so grateful for your support, my clients, my friends, my family, taking the time to watch my videos. I am just here to educate you guys and provide as much value and information, and just know that I appreciate you guys being here. I hope you have a wonderful year. I'll be giving one of these updates every month, so we'll have another one in February. Please like, subscribe to the channel, share this with somebody who you could find this information useful. If there's any topics you want to discuss, please leave them in the comments. Again, I hope everyone has a great day. We'll see you next time. Have a great weekend. Bye-bye.